August is a quiet month. Congress is out, nothing gets announced, the news is thin. And that is exactly why August is one of the most expensive months of the year for people over 60. Because the things that cost you money in August do not arrive with a headline. They arrive as a deadline that already passed. As a fee at a register that was never there before. As a check that comes in smaller than last month with no letter explaining it. 5 of them are moving right now, this month. And I'm going to start with the one that already closed, 27 days ago, because what you do about a door that is already shut is completely different from what you do about one that is still open. Most people would put that one last, or skip it entirely. I am putting it first, because you can still do something about it, and almost nobody is going to tell you that. My name is Kevin. Every week I go looking for the rule that quietly decides what happens to your money, and I bring it here before it costs you anything. Subscribe and turn on the bell, because a great deal of what I am about to tell you has a date attached to it. Number 1. The refund window that closed on the 10th of July. Here is what happened, and I want you to hear it properly because it is one of the strangest things to come out of a federal courtroom in years. In November of 2025, the United States Court of Federal Claims ruled in a case called Kwong versus United States. The question in that case was about a section of the tax code that automatically postpones federal tax deadlines during a declared national disaster. And the court held that the COVID disaster declaration triggered that automatic postponement for the entire length of the declaration, which means every federal tax filing and payment deadline from the 20th of January 2020 through the 10th of July 2023 was legally suspended. Now think about what that means. If the deadline was suspended, then a great many of the late filing penalties, late payment penalties, and underpayment interest charges assessed during those 3.5 years should never have been charged at all. And the National Taxpayer Advocate, which is the independent watchdog inside the Internal Revenue Service, said publicly that tens of millions of taxpayers might be entitled to get that money back. Tens of millions. Not thousands, tens of millions. The form is Internal Revenue Service Form 843, Claim for Refund and Request for Abatement. It is free, and the deadline to file it was the 10th of July 2026, 27 days ago. Now, I am not going to stand here and tell you that missing it does not matter, because it does. But I am also not going to let you assume it is over, because that is what most people will assume, and it is not necessarily true. Here is the honest picture. The government is appealing that ruling. The Internal Revenue Service is not issuing these refunds right now, and it may be years before this is finally settled. Filing was never about getting a check next month. It was about preserving your place in line if the taxpayers ultimately win. And if you file now, late, you are in a weaker position than somebody who filed in June. I will not pretend otherwise. But a claim filed in August is in a stronger position than a claim never filed at all. And it costs you a stamp. And I want to be specific about who this covers, because most people assume it is only for somebody who owed a fortune and did not pay. It is not about whether you owed tax. It is about whether you were charged a penalty or interest, failure to file, failure to pay, underpayment interest, estimated tax penalties. If any of those appeared on a notice from the Internal Revenue Service for a deadline that fell inside that window, that is the charge this is about. You could have filed on time, paid what you owed, and still been assessed a separate penalty for something. That counts. And the window covers tax years going back before it, because what matters is not the year the income was earned, it is when the deadline to file or pay actually fell. Nadine is 69 in Bowling Green, Kentucky. She filed a return late in 2021. Not because she was avoiding anything. Her husband was in and out of the hospital that year, and the paperwork sat on the table. She paid a failure to file penalty and interest on top of it, several $100s. She was embarrassed about it, paid it, and never thought about it again. That penalty is exactly the kind of charge this ruling is about, and nobody sent Nadine a letter. Nobody was ever going to. There is no department whose job it is to notice that a court said your penalty may have been improper. If you paid a federal penalty or interest on anything due in that window, print Form 843, write Protective Refund Claim across the top, reference the case by name, do one form for each tax year, and mail it certified. Keep the certified receipt. That receipt is your date. Now this is exactly the shape of the problem I built the quiet rules around. A ruling comes down, a window opens. The window is real and it is worth money, and the only people who file inside it are the ones who happen to have a professional in their life who read the right newsletter. Everybody else finds out afterward, if they find out at all. The guide is the other side of that. It is what to check, in what order, and which dates are running against you right now. Plain language, large print, one place, so it is already on the shelf when the next window opens, instead of being explained to you after it closes. kevinexplains.shop. It is in the description, it is in the pinned comment, or scan the code on your screen right now. 7 days to look it over. If it is not for you, send it back. Number 2, and this one hits in August specifically, every single year, and it catches people completely off guard. If you are collecting Social Security and you have not yet reached your full retirement age and you are working at all, there is a limit on what you can earn. For this year, that limit is $24,480. Earn $1 over it, and Social Security withholds $1 of your benefit for every $2 you went over. Now here is why August is the month this becomes real. $24,480 a year works out to about $2,040 a month. If you took a part-time job in the spring or picked up hours or your seasonal work ran hot in June and July, August is roughly when you cross that line without noticing. And then here's the part that genuinely shocks people. Social Security does not shave a little off each month to make it even. In many cases, the agency withholds entire checks, one after another, until it has recovered the full amount. So you do not get a slightly smaller deposit. You get nothing at all, for a month or 2 months, and then it resumes as if nothing happened. Lester is 64, in Winona, Minnesota. He filed for Social Security at 63 because his back was bad and the job he had was not going to work anymore. Then he found something lighter, part-time, driving a shuttle for a hotel, 4 days a week. It was good work. He liked it. And between the shuttle job and a few weeks of extra summer hours, he is going to land somewhere around $30,000 this year. That is roughly $5,500 over the limit, which means about $2,700 gets withheld. And for Lester, whose monthly benefit is a little over $1,400, that is not a trim. That is close to 2 entire checks that simply do not arrive. He has a mortgage payment that comes out on the 3rd of the month. It does not know or care what the earnings test is. Now, I want to give you the good news about this rule, because there is real good news and almost nobody says it. That money is not gone. When you reach full retirement age, Social Security recalculates your benefit to give you credit for the months that were withheld. Your check gets permanently larger to make up for it over the rest of your life. So the earnings test is not a penalty, it is a delay. Most people go their entire lives believing it is a penalty, and that belief has talked a great many people out of work they wanted and could have used. And once you reach full retirement age, the limit disappears entirely. You can earn any amount with no reduction at all. And I want to clear up the single biggest confusion about this rule, because it costs people real money in the other direction. The earnings test only counts money you earn from working, wages and self-employment income. It does not count a pension. It does not count withdrawals from a retirement account. It does not count interest, dividends, rental income, or annuity payments. So a man taking $40,000 a year out of savings is not affected by this rule at all. A man earning $30,000 driving a shuttle is. Same money arriving in the same account, completely different treatment. And there is a special rule for the first year you retire that a great many people never hear about. In that first year, Social Security can look at your earnings month by month instead of for the whole year, which means if you worked hard through June, retired, and earned nothing after that, you may still be paid for the months you were actually retired, even though your total for the year was over the limit. If you retired this year and you are being told you went over, ask specifically whether the first year monthly rule applies to you. Here is what to do this month. Add up what you have earned from work so far this year. Wages and self-employment only. Not pension, not interest, not withdrawals from savings. None of that counts. If that number is heading past $24,480, call Social Security and tell them before they find out from your W-2 next year. Because if they find out afterward, they take it back in a lump, and finding that out in February is a far worse month than finding it out in August. Number 3, and this one has a hard date on it, the 15th of September, which is close enough now that you have to move. There is a deduction most people over 65 have heard about, and almost nobody has actually recalculated their year around. It is the senior deduction that came out of the big tax bill. $6,000 per person aged 65 or older, $12,000 for a married couple where both qualify. It stacks on top of the regular standard deduction and on top of the extra standard deduction you already get for being 65. And it phases out above $75,000 of income for a single person, $150,000 for a couple filing jointly. Now here's the part that has an August deadline attached to it. If you make quarterly estimated tax payments, and many retirees do, because nothing is automatically withheld from most retirement income, your payments this year may be wrong. Because a great many people set their quarterly amount based on last year's numbers and last year's rules, and never went back and adjusted for a deduction that reduces their taxable income by $6,000 or $12,000. Which means one of two things is happening in your account right now. Either you are overpaying and handing the government an interest-free loan you will not see again until next spring, or you are underpaying and there is a penalty accruing on the shortfall that you will not learn about until April. Now, I want to be honest with you about who this deduction actually helps, because there has been a lot of loose talk about it. If your income is low enough that you already pay no federal income tax, this does nothing for you. There is no tax to reduce. 0 minus 6,000 is still 0. And if your income is high, the phase-out eats it. The people it actually helps are in the middle. And I would rather tell you that plainly than let you plan around a benefit that never lands in your account. Doreen is 67 in Sandusky, Ohio. She has a modest pension, Social Security, and takes a bit out of an account each year to cover what those two do not. Nothing is withheld from any of it automatically, so every year she sends the government 4 payments, one each quarter, based on a number her preparer worked out. That number was set before this deduction existed, and it has never been revisited. So 4 times a year, she sends more than she needs to. It comes back eventually as a refund next spring. But between now and then, it is not in her account, it is not earning her anything, and it was never owed in the first place. That is not a catastrophe. Nobody is going to take her house over it. It is just her money sitting somewhere else for a year for no reason because one number never got updated after the law changed. Your third quarter estimated payment is due on the 15th of September. That is your next chance to correct either one before the year closes. So this month, before that date, sit down with what you have paid in so far and check it against what your income is actually going to look like this year, with the deduction included. If you use a preparer, this is the phone call to make in August, not in January when everyone is calling them at once. Number 4, and this one is not a law or a benefit. It is happening at the register, and it is happening to you several times a week. Credit card surcharges. A surcharge is an extra fee a merchant adds to your bill specifically because you paid with a credit card. Not a rounding difference, not a tip line, a separate charge on top of what the item costs. They are legal in most of this country now, and the reason you are noticing them this year and not 5 years ago is that processing costs went up and businesses stopped absorbing them. Now here are the rules that protect you, and I want you to know all 4 of them because most people do not know a single one. Rule 1. The card networks cap it. Visa caps a surcharge at 3%, MasterCard at 4%, which in practice means 3% because almost every business takes both. Rule 2. The surcharge can never be more than what it actually costs the merchant to process your card. They are not permitted to make money on it. Rule 3, and this is the big one. Debit cards cannot be surcharged anywhere in this country, not in any state, and that holds even if you run your debit card as credit at the terminal. It is still a debit card. The fee is still prohibited. Rule 4, it has to be disclosed to you before you pay. A sign at the door, a notice at the register, and a separate line on your receipt showing the actual dollar amount. A handful of states ban credit card surcharges outright, and at least one caps them well below the network limit. If a fee shows up on your receipt in one of those states, that is a violation, not a policy. Now let me tell you what this actually costs, because on any single purchase it looks like nothing. 3% on a $200 grocery run is $6. Do that once a week, plus a pharmacy trip, plus a restaurant, and you are looking at something in the neighborhood of $30 to $40 a month, which is $400 or $500 a year for the crime of pulling out the wrong piece of plastic. And here is my opinion, and I am going to say it plainly. I do not blame the small business owner for this. Processing fees are real, and they are brutal, and somebody has to pay them. What bothers me is where the fee lands. The people most likely to pay a surcharge without noticing are the people who cannot read the small print on a receipt in a dim store, who do not want to hold up the line, and who were raised to believe that questioning a bill is rude. That is a description of a great many of you watching this. So here is what I want you to do, and it takes no confrontation whatsoever. Use debit or use cash for routine purchases. That is it. That one change eliminates the fee entirely because debit cannot legally carry one. And look at your receipt before you leave the counter. If there is a line on it you do not recognize, you are allowed to ask what it is. You are allowed to ask that. And there is a version of this you should know about that is not technically a surcharge at all. It is called dual pricing or a cash discount program. Two prices on the shelf, one if you pay cash, a higher one if you pay by card. That is legal essentially everywhere, including in the states that ban surcharges outright, because the law treats a discount for cash differently from a penalty for credit. It is the same money moving the same direction. It is just labeled from the other end. I am not going to tell you that is a scandal because it is not. It is a business deciding what to put on a sign. But you should know that in a store with two prices, the card price is the higher one, and the difference is coming out of your pocket the same as any fee would. Rowena is 73 in Beckley, West Virginia. She noticed a fee on a pharmacy receipt in the spring, assumed it was some kind of tax, and did not ask. Then she found the same line on a receipt from the hardware store, and a third one from a restaurant, and she started keeping them in a drawer. 6 months of receipts came to more than $200. Not stolen, not illegal. Fully disclosed on a sign she walked past every time. In print she could not comfortably read. That is the shape of almost everything I cover on this channel. Not fraud, not a scandal, just money moving out of your account through a door that was technically labeled, in a size and a place and a language that made sure you would not read it. That is what the quiet rules is for. It is the labels, in plain language, in print you can actually read, for the money decisions that come at you in an ordinary week. What to check, what to say, and what the fee or the form or the deadline actually is. Kevin explains .shop. Description, pinned comment, or the code on your screen. 7-day guarantee, always. Number 5, and this one is happening right now, this month, and there is nothing you can do about it, which is exactly why you should understand it. Your raise for next year is being measured this month. Here is how the Social Security cost of living adjustment actually gets set, and almost nobody knows this part. It is not a vote. Congress does not decide it. The President does not decide it. There is no debate about it. It is a formula, and it runs on the Consumer Price Index for urban wage earners and clerical workers, measured over July, August, and September. 3 months. That is the entire measurement. July is already in the books. August is being counted as you watch this. September finishes it, and then the number is announced in October and takes effect in January. So the raise that shows up in your check 5 months from now is roughly 2/3 decided already, and it was decided by grocery and fuel and rent data collected across this summer. Now here's why I want you to understand the formula rather than just wait for the number. That index measures the spending of urban wage earners and clerical workers, working-age people with commutes and mortgages and children. It is not built around what a retired person actually buys, and what a retired household spends most of its money on, compared to a working household, is medical care and housing, which have, for most of the last 2 decades, risen faster than the basket that index is measuring. Which is my honest opinion on this, and it is not a popular one to say out loud in a video about a raise. The cost of living adjustment is not a raise. It has never been a raise. It is an attempt to keep you level, calculated using somebody else's shopping cart. And there is a second thing about the timing that almost nobody connects, and it matters more than the raise itself. The Medicare Part B premium for next year gets announced in the fall as well, usually in November, after the raise is already public. So the sequence every single year goes like this. In October, a raise is announced and there is good news for a few weeks. Then in November, a premium is announced, and it comes out of that same check before it reaches you. Which is why so many people tell me the raise never showed up. It did show up. It arrived and left in the same motion. I am not going to give you a prediction on either number, because anybody giving you a firm prediction in August is guessing. What I will tell you is what to do when they land. When the raise is announced in October, do not adjust anything. Write the number down and wait. When the premium is announced, subtract it. That difference is the only number that means anything to your household. And if you plan around the October number instead of the November one, you will plan around money that was never going to arrive. Let me put the last few years in perspective, because the word raise does a lot of work it has not earned. A raise in the low single digits on a check of about $2,000 is somewhere in the neighborhood of $50 or $60 a month. Now go stand in a grocery store and think about what $50 covered 5 years ago and what it covers now. That is not an argument about politics, that is just what the arithmetic feels like at the register. And the reason I want you to understand the formula rather than the number is that the formula is the thing that never changes. Every October there will be a number, and every October somebody will tell you it is generous and somebody else will tell you it is an insult. Neither of them is describing a decision. They're describing the output of a calculation that ran on data collected while everybody was on vacation. There has been talk for years about switching to an index built around older Americans. It has never happened. I am not telling you this to make you angry. I am telling you because in October, a number is going to be announced, and there will be a great deal of noise about whether it is generous or stingy. And the truthful answer is that it is neither. It is a formula. It already ran, and it was never designed around your life. Now, before your checklist, one warning, because August is a good month for the people who prey on this. Nobody from the Internal Revenue Service is going to call you about a refund. Nobody from Social Security is going to call you about your earnings. If your phone rings and somebody says they have found money for you, or that your benefit is about to be suspended unless you confirm something, that call is a scam, every time. You call them, they do not call you. That one rule will protect you from nearly everything. And there are 2 specific versions going around this summer that I want to name. The first one uses this exact court ruling. Somebody calls, says they are helping people recover their pandemic tax penalties, and offers to file your claim for a fee taken up front. The form is free. It is 4 pages. The government charges nothing for it. The second one uses the earnings test. Somebody calls claiming your benefit is being suspended because of a work discrepancy, and they need to verify your Social Security number to release it. Social Security already has your number. That is how they found you. Here is the test that never fails. And it is simpler than anything else I could give you. Legitimate money never requires urgency on a phone call. Not once, not ever. If somebody is telling you it has to happen today, it is not the government, whatever the caller identification on your phone says. Here is your August checklist, 5 things. 1. If you paid a federal tax penalty or interest on anything due between January of 2020 and July of 2023, file Form 843 anyway, even though the window closed last month. Write protective refund claim across the top, 1 form per tax year, mail it certified, and keep the receipt. It may not work. It costs almost nothing to try. A claim filed late is worth more than a claim never filed. 2. If you are collecting Social Security, under full retirement age, and working, add up your wages so far this year. If you are heading past $24,480, call Social Security this month rather than letting them discover it next year. And remember, it is withheld, not lost. You get it back through a higher check for the rest of your life once you reach full retirement age. 3. If you make quarterly estimated tax payments, recalculate them before the 15th of September, with the senior deduction included. Overpaying costs you the use of your own money. Underpaying costs you a penalty. 4. Switch to debit or cash for routine purchases. Debit cards cannot legally be surcharged anywhere in this country, and that single change removes the fee entirely. And read the bottom of your receipts. 5. Understand that next year's cost of living adjustment is being measured this month, and there is nothing to do about it except know what the number will mean when it arrives in October, which is not nothing. Knowing what a number means before everybody starts shouting about it is worth something. Here is what I want you to take out of this video. Nadine paid a penalty that a federal court later suggested should never have been charged, and nobody wrote to tell her. Lester is going to lose 2 checks he is counting on because a limit he had never heard of counts a job he took in good faith. And Rowena paid $200 over 6 months through a sign she walked past every week. Not one of those is fraud. Not one of them is illegal. Not one of them involved anybody doing anything wrong on purpose. That is the thing about August. Nothing is announced, nothing is voted on, and the money moves anyway. So take the 20 minutes this week, add up the wages, check the estimated payment, read the receipt, print the form. August is quiet, and quiet is exactly when this stuff gets done, because nobody is going to remind you in a month that is busier. And I want to say one more thing about this month specifically. There is a reason I do a video like this in August and not in December. In December, everybody is thinking about money. The year is closing, the statements arrive, everybody is busy, and everybody feels behind. Nothing gets done well in December. August is the opposite. Nothing is happening, nobody is thinking about any of this, and that is exactly the condition in which 20 careful minutes are actually possible. The people who stay ahead of this stuff are not smarter than you, and they do not know something you do not. They do it in the quiet months. I am Kevin. Thanks for watching. Do not forget to check the quiet rules at kevinexplains.shop.